Hi, this video is a condensed version of an article by Tim Rowe from the National Christian Foundation regarding sunsetting tax laws and how they might affect our charitable giving strategies. The Tax Cut and Jobs Act, TCJA, passed in December 2017, brought major changes to taxes affecting charities and generous donors. With many of its provisions set to expire in 2025, Congress is deciding whether to extend, replace, or let expire. Here's a look at some key changes and how they may impact your charitable giving. Income tax rates are the first thing to change. The Tax Cut and Jobs Act lowered the top income tax rate from 39.6% to 37%. If the rate returns to 39.6%, high-income donors might give more while maintaining the same net income. That's because charitable deductions offset more taxes at a higher tax rate, making donations more impactful. Another change is charitable deduction limit for cash gifts. Before the TCJA, donors could only deduct cash donations up to 50% of their adjusted gross income, AGI. The TCJA raised this to 60%. Without changes, the limit will drop back to 50% in 2026, reducing how much donors can deduct. A third change is the deductions and the P's limitation. The TCJA removed certain deductions and eliminated the P's limitation, which reduced itemized deductions for high-income taxpayers. These changes are set to return in 2026. While this may make more deductions available, the P's limitation could reduce the value of those deductions, including charitable gifts. Donors and tax advisors will need to revisit these rules. A correlated aspect of this is the pass-through entity tax, PTET. The pass-through entity tax applies to taxpayers with pass-through business income who would normally pay state taxes at the individual level. Partners in such businesses may elect to pay the tax at the entity level in certain states and therefore avoid the $10,000 P's federal limitation. If an eligible entity elects to pay the PTET, its partner members or shareholders, subject to the tax deduction limitations, may be eligible for a PTET credit on their state income tax returns. Another change, the qualified business income deduction. TCJA also introduced a qualified business income deduction, allowing business owners to deduct up to 20% of their qualifying income. Charities that own businesses benefiting from this deduction could lose resources if it sunsets. It could also indirectly impact donations if business owners have less income to give. The standard deduction may also change. TCJA nearly doubled the standard deduction, which is $15,000 to $30,000 in 2025. A higher standard deduction means fewer people itemize, reducing the incentive to give. If the deduction is lowered, more taxpayers may itemize, possibly boosting donations. This may prompt donors to rethink their giving strategies. The child tax credit is also scheduled to change. TCJA doubled the child tax credit, providing families with extra financial support. If the credit shrinks, families may face tighter budgets, making it harder to give generously. The gift and estate tax laws are also scheduled to change. TCJA increased the gift and estate tax exclusion to $10 million. It's now about $13.9 million with inflation in 2025. This allows individuals to transfer more wealth tax-free. If it drops back to the pre-TCJA levels, estates will face higher taxes. Donors may choose to give more to charities instead of paying taxes on their estates. This change could encourage more charitable giving and donors update their estate plans. There's some permanent changes too. Some TCJA provisions are considered permanent, but they could still change under new tax laws. These include the corporate tax rate reduced to 21%, a longer holding period for carried interest, 3 years currently, in order to qualify for lower capital gains taxes. What's next? If Congress doesn't act, these changes will happen automatically at the start of 2026. While some provisions may reduce giving incentives, many donors are motivated by generosity and their desire to make a positive impact. We're closely watching these developments. Our goal is to help donors navigate changes and maximize their deployment of the resources that God has entrusted to them, either through giving or through redemptive business investments. We want to see God's stewards maximize deployment for causes close to their hearts, and we hope these shifts create new opportunities for impact, all for the glory of God.